This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, September 22nd, 2015. Euro dollar. So the euro is stalled out by some key internal range resistance in the 114s, and the latest setbacks have accelerated to the downside, with the market now focused on a retest of that low that we saw back on the 3rd of September at 110.87. A close below 110.87 will open the door for the next downside extension towards critical medium-term support in the form of the 20th July low at 108.09. At this point, only back above 115 would compromise the immediate bearish outlook. Sterling dollar. So cable gains have stalled out by 156.59, and the market looks poised for a resumption of declines, potentially back down towards that recent 151.65 low going back to the 4th of September. At this point, only a break back above 156.59 would compromise the bearish outlook. Dollar yen. So dollar yen has been contracting over the past several sessions, though the market does look like it's putting in a lower top at 121.74, which will be confirmed on the next downside extension below support at the 24th of August extreme low of 116.12. At this point, only a close back above 121.74 would negate this bearish outlook. Euro Swiss. So Euro Swiss has seen some setbacks in recent trade, though the setbacks are still classified as corrective, with the broader recovery outlook still intact. At this point, a higher low is sought out somewhere ahead of 107.14 in favor of the next upside extension beyond recent highs that we saw at 110.50 and towards 112 further up. At this point, only a close back below 107.14 would compromise the bullish outlook. Aussie dollar. So Aussie looks like it's finally putting in a lower top after trading all the way up above and towards the 73 area. At this point, look for the market to carve out that lower top and trade back down towards the recent multi-year lows that we saw several days back, below which exposes a measured move objective at 68.30. Really only back above 74.40 would compromise the bearish outlook. Dollar CAD. So dollar CAD continues to consolidate over the past several days, and any setbacks are very well supported in favor of what should be a bullish continuation above the recent 11-year high at 133.54 and towards 135 further up. At this point, only back below 128.60 would compromise the bullish outlook. Kiwi dollar. So Kiwi remains locked within a very well-defined downtrend, and the market has recently seen a correction that stalled out, with the gains reaching all the way up towards the 64.57, 64.58 area before reversing lower again. At this point, look for a break back below that recent multi-year low from the 24th of August at 61.30, below which exposes psychological barriers at 60 further down. Only back above 67.40 though would compromise the bearish outlook. The SPX 500. So the S&P 500 has recovered from those recent extreme lows on the 24th of August, with the market trading all the way back above 2000 to the 2022 area. But a lower top is now sought out in the 2022 level in favor of the next downside extension back towards those recent 1830 area lows, and below that expected through 1800 further down. At this point, only a close back above 2022 would compromise the newly adopted bearish outlook for the SPX 500. Gold. So gold continues to show signs of healthy recovery, with the market seeing some setbacks in recent days supported around 1100 above that previous recent multi-year low at 1073. Look for a break above 1170 to confirm a higher low in the 1100 area and open the door for an acceleration back towards 1233 further up. Only a close back below 1100 would put the pressure back on the downside.